Patrick Njoroge, former governor of the Central Bank of Kenya. It's great to have you on this Arise special interview.
Thank you for the invite, Njoroge.
Yeah, and I know you're in Lagos attending to personal and professional engagements, but it's been a little over a year since you finished your tenure. Some would say quite a successful one at the Central Bank of Kenya, one of Africa's largest economies. What have you been up to since that? You're obviously in Lagos here, doing a lot, but tell us a bit about what your post-CBK life has been like.
Well, thank you very much again. I retired away from the Central Bank of Kenya in June of 2023, so a little over a year ago. And the first thing I needed to do is to rest.
Okay.
Yeah, I was completely burnt out. And also to focus on family, focus on friends, etc. Then, of course, I've been looking at things that I haven't done in the past. I'd always wanted to do, not so much a bucket list, but, there are things that I have interesting questions that I've been looking at, etc. Been doing a bit of travel. For instance, the first time had never been to Nigeria before.
Okay.
And so, but I was here in July of this year, and this is my second time. So maybe I'm making it a habit, and I'm learning a lot from the trips. Also spending time with people that maybe I wouldn't have spent time with. And one of the things that, as you know, when I was in July, I went out and hung out, as it were, with some of the musicians, Rude Boy. And, and this time around, I also hung out with the bunch. And it was interesting. These are people that I wouldn't generally, artists, I wouldn't really work with. And each time, Rude Boy dropped an album.
Yes.
Oh, actually, it's a track, Vitamin D. And this time around, DeBarge also dropped an album. So maybe I need to come more frequently,
Clearly.
and then there'll be much more creativity.
Indeed,
Yeah.
Indeed. Africa's creative talents are so amazing. And it's quite a contrast from what you used to do at the Central Bank of Kenya.
Absolutely.
And talking about the Central Bank of Kenya, African central banks play quite an important role in the economy, the financial services sector as a whole. How do you see their role in terms of ensuring financial stability in a climate like this, and especially protecting the main stakeholders, consumers and depositors?
So central banks are extremely important, both in the narrow sense of the financial sector and in the wider sense in the economy. And if they stumble, the economy will stumble.
Absolutely.
So one of the things they generally should do is to work to reduce or maintain price stability, inflation. And their success in the first instance has to be measured against the inflation control that they actually maintain. So this is a time in the global sort of sphere where there's a lot more shocks coming in, including price shocks.
Of course.
And so the central banks have to deal with those things. The price of oil also fluctuates quite a bit. So I think that is the first mandate of central banks which they need to look at. Then the second thing is financial stability. And they conduct that in the context of, let's say, regulating some of the major financial institutions, that is commercial banks in particular, and a few other specialized institutions. And they're ensuring that those institutions are strong and are not creating unnecessary risks.
Yeah.
And those risks are managed. That is really the business of regulation. And I think the point is that there'll be shocks going forward. And if we cannot depend on the financial institutions, strong financial institutions, I think we've lost our way.
Absolutely.
As well. And we'll never become a strong economy. And now I'm talking not just the country, Nigeria or Kenya, but actually Africa in general,
yeah.
if indeed the financial sector is stumbling. So the central banks do have a very important role.
And you know, the job of a governor of a central bank in Africa is a tall order. It's not a walk in the park. And you're often taking very tough decisions that involve balancing certain interventions. During your tenure at CBK, you had to take some tough decisions around specific banks. How did that shape your thinking about leadership in difficult situations when you're facing a dilemma? Perhaps it wasn't a dilemma for you. You clearly knew what to do. But there were a few banks. I heard about Chase, Imperial Dubai Bank. Yeah. How did that shape your thinking?
Yeah, there are 3 banks that we shut down very quickly very soon after I became governor, a few months after. But I think I want to begin by saying that, yes, the task of a governor and indeed the central bank more generally is a tough one. It's a difficult one. And I think, unfortunately, everyone else has an opinion about what should have happened.
Sure.
So, and you have to shut down all that and focus on the technical answer and what is best for the economy and deal with that. So I think the first thing is clarity about what needs to be done in terms of what are the risks. And in this case, one can determine, or we determined that the risks were excessive. And that's because of their poor business practices, maybe the sort of weak balance sheet. So in that sense, it became clear that they could in effect infect the rest of the financial sector. Now, shutting them down is not just turning off a switch. Yeah?
Indeed.
There are depositors that will be affected. And you could say they are the innocent bystanders. And in some sense, that has always been a big concern of any regulator. And that's why at times it's easier to have some forbearance. You sort of say, well, let's give them a pass and all that. But like everything else, forbearance will end up becoming the problem. For instance, if I don't go to the gym today, if I don't exercise today, nothing really happens.
Indeed.
But after I've not gone to the gym or exercised in a week, I'll really notice it.
Yes.
A month, there'll be problems. So I think that's really it. So clarity about what to do is key. Then the other thing is importance of ensuring that the regulation is up to snuff, is according to best practices. So you're not regulating randomly, quote unquote. You're using best practices, and also you're regulating techniques, etc. Your supervision techniques, etc., are up to world standards. So in effect, this whole experience centers on this sort of improvement trajectory.
Absolutely.
And I think we've come out better. Now, having said that, it is important to appreciate that there are three jurisdictions that are essential for the rest of Africa to have good regulation and strong banks. And that is because those 3 jurisdictions have Pan-African banks. So that is Nigeria, South Africa, and Kenya. So it is important to also see that there is a certain responsibility for other jurisdictions and people much wider, so not only in your own jurisdiction.
Yes, indeed. And Nigeria is going through a banking sector recapitalization now. Yes. So as a central bank, you have to take a view on what a potential ideal, optimal, and properly working sector looks like. But let's take a look at the actual model of central banking in Africa. In the UK, you have a situation where you have the Bank of England, you have a prudential regulatory authority. So there's almost like a wall, a separation of powers, if you like, model, like similar to what you have in politics and banking. Is there a place for certain African countries or central banks to move to a model where there's a clearer delineation between functions, between regulation, supervision, or monetary policy management. Do you see that? Do we need that in Africa?
I think we have to understand the context here.
Okay.
There was a time when, even in banking sector regulation, there are fads.
Sure.
And there was a time when actually the fad was we really need to move the regulation, the micro and macro regulation of these institutions away from the central bank. So there's no quote-unquote conflict of interest, whatever it was.
Yeah.
And indeed, the Bank of England did exactly that. But guess what? They brought it back after bad experiences. They brought it back into the central bank, meaning the Bank of England.
Yes.
And today it is, well, you may call it a department of the Bank of England. Mm-hmm. Basically, it's back where they started off. The point is also, so that is one thing I want to be clear that actually that experiment failed.
Okay.
And we believe as in the profession, in the trade, that it is important to have clarity and that sort of information, timely information on a day-to-day basis on what is happening in each bank. And that information is fed to the regulators. So, for instance, I would want the governor of the central bank here to be able to see, well, actually his staff, to be able to see the state of the banking sector sort of almost real time. And that would help in their regulation, and therefore there won't be any surprises.
Absolutely.
So the filing of reports and all that is very much quote-unquote pro forma, so that is one thing. Now, there's the other thing which maybe you also alluded to, which is the so-called Twin Peak model of regulation, which is separating the consumer protection from the prudential, macro-prudential sort of regulation thing. And that, I think the jury is still out.
Okay.
And I think there are different things are happening in different ways. My take on this is we are very much pushing the banks, our banks in Africa, to pick up on consumer issues. There are three things that I think are important. One, of course, is this one of, I talked about financial stability.
Sure.
But I think the issue of being more consumer-centric, our banks are way behind.
Okay.
And in some sense, I mean, the customers are seen as people that should be kept away from their resources. So you go to the counter and so what you want. There's a sort of a harshness. Kind of. I'm exaggerating, but not by much. Yeah. And you see this because think of the number of accounts that let's say they are here in Nigeria. I don't remember the number at the top of my head, but in effect it won't be that large because you don't have too many SMEs in that space. Absolutely. So you have people who are salaried and those have accounts, but I think the way they're working with their consumers, with their customers, is not so helpful to the customer. So consumer protection is a big thing and improvement in that. I think this is an area for growth. This is an area of growth. Now, you could say that more mature countries, more mature jurisdictions probably have reached the point where it doesn't matter either way because now they've reached a cruising attitude.
Yes.
But we are not there yet.
Indeed, yeah.
So, and the central banks, I think, should be in the job of pushing. Now, in the case of Kenya, actually, and this is my last point, we got into what we call the banking sector charter.
Okay.
So the banks actually signed up on this charter where there are four elements to it. One is this consumer centricity, customer centricity. The other one is having risk-based pricing of their risk-based pricing of their loans.
Yes.
Yeah. And the third one is disclosures and transparency of what their operations and indeed to the customer. So you know what the average interest rate is, for your bank or whatever it is. And finally, of course, is being ethical. Those, we've started on that, and I think a lot of other jurisdictions in Africa
are looking at that.
Need to do that as well.
Yeah, and that's an interesting point, because I think often sometimes it seems like consumer protection in African banking almost always boils down to depositors' insurance,
Yeah.
and it's only when we fail then we're seen to be protecting consumers.
Absolutely.
As opposed to a more proactive
Exactly.
type of engagement. But speaking of SMEs, right, and engagement, financial inclusion.
Yes.
I know that's an area you're very passionate about, and I think some of the work you did with there was a UN special task force, I think that the UN Secretary General Antonio Guterres had appointed you to look at some issues around that. How do banks, central banks in particular, in this day of fast innovation around financial technology, strike that balance between getting more people into the formal financial net, banking services, and regulating or not over-regulating financial technology that actually then helps you push out financial services to last-mile consumers and communities?
Yeah. Okay, so there are two sets of questions there, and
Yes.
I want to take them separately. First is your question about financial inclusion margin. It is an important outcome, and we need to expand financial inclusion. In Nigeria, at this moment, it is like 63%. I seem to recall a number like that, 63%. So you could say there are almost 40% that are excluded. And that itself is a drag. There are maybe I think it's 1.8 billion people in the world that are excluded from the financial sector. And that is a huge drag, economic drag, in the sense that we could go much further if these people are included and they're using the financial services or financial sector for various operations, savings, transactions, etc. So I think it is important to see that that is an objective, but it is a developmental objective sort of in the, let's say, medium term. It won't happen tomorrow. Yeah. Now, the issue is we have to understand why however many people are excluded. And it isn't a one-size-fits-all problem. By the way, Kenya, at one point, this is in 2006, financial inclusion was at 27%. And now, well, maybe 2 years ago when the last survey was done, 3 years ago actually, it was at 83%. So significant improvement.
Yes.
So it can be done. And other countries have moved quite quickly. But one needs to understand why and therefore what is the solution. So there isn't any one solution for everything,
Yes.
cookie-cutter approach.
Indeed.
One of the issues that we have seen, we asked ourselves, why is it at 83%? Why can't we just bring it to
100,
100, right?
Yes. Yeah.
And you begin to see that there are other issues that are harder to deal with. For instance, one of the issues we found was some of the young people hadn't got their national IDs. Yeah, so these are people who are in their 20s. And during COVID, that wasn't happening. So you could say they are adults, but they are therefore excluded because they cannot get their mobile devices, etc. It's still registered in their mother's name or their father's name or whatever else it is. So I'm making the point that that was one issue. Then the other things about women, for instance.
Sure.
Maybe women don't also have the same challenge, right, of not being having ability to, for cultural reasons, they are not allowed or they don't have easy access to this sort of phones, etc. So there are other issues that need to be dealt with. Now, the central bank, of course, needs to support that, but it cannot do it by itself. And I think that is important. And you have to do it with the other partners in the place. Yeah. We, for instance, did it with the telcos because
Yes.
a major element of that was the mobile phone
Payments.
technology.
Yes.
Yeah, and we'll talk about the numbers in a minute. So I think the point here is to appreciate that the central bank, even as it was also a bit fashionable in Africa to talk about central banks pushing financial inclusion, to understand that they cannot do it by themselves. Why? Once they overdo it, it's like chasing two rabbits. Yeah, you won't get any of them.
Yes,
Yeah?
yeah.
So let them focus on inflation. In Nigeria, it's at what, 33%. I mean, if that is not a big job right there, if their terms of reference are not so clear with 33%, then I don't know what would make it more clear. So that's one answer to your question of financial. Now, central banks generally have been blamed for being anti-innovation. I think that's just a bad rep. It's not necessarily the case. What they should be concerned about is financial stability, and that these things don't create risks to financial stability. And so if they regulate the space, then the innovators can do whatever they want. The central bank doesn't know anymore. As a matter of fact, they don't know whatever that's a tool is being brought to them, etc. They don't have some sort of God-given knowledge. Yeah. So even on technology side, they know less than the innovator. But in terms of appreciating, they have to ask the right questions and appreciate that whatever they're going to regulate doesn't create this financial stability. And that's pretty much what it should be. And I think some of the, central bankers are weird people, I have to tell you. They are the only people that see risks. For instance, you may have, like today, it was a brilliant day. But you meet a central banker, at lunchtime and say, oh, it's such a nice day. And they'll say, yes, it is, but it may rain this afternoon. So they worry about risks.
Indeed.
And that is their business.
Yeah, and in quite a conservative approach, some would argue. But speaking of financial technology, you talked about mobile penetration. You talked about some of the other ecosystem players, if you like, that are bringing new products on. But you've also seen some central banks try and also pivot in some ways or diversify their role into some of these sectors. For instance, Nigerian Central Bank created a digital currency, the e-Naira, which hasn't quite caught on as they expected, but that at least shows that there is some thinking around innovation, and there's some thinking about how else they can solve the problem of financial inclusion. Is that a future? Do you see more central banks, African central banks, moving more in that direction? Or is it going to be more collaborative? So working with like an M-Pesa or working with some of the other fintech companies or mobile operators that are coming up?
I would actually say I don't have a
clear answer.
I don't have a glass ball, glass ball to figure it out. But I think I see multiple channels.
Okay.
And we in Kenya succeeded in terms of improving the financial inclusion to that point, partly because, largely with the use of the technologies that the telcos put forward and all that. And today there is an elaborate ecosystem that has grown around that. Now, it's also true that in some other countries, some other jurisdictions around the world, they've had a hard time putting in similar, sort of like a cut and paste of that technology into their space. So the idiosyncrasies of the jurisdiction are very relevant.
Sure.
For instance, here, in Nigeria, a lot of the transactions are cash and debit cards.
Sure.
You don't have that many credit card transactions. If you think of South Africa, for instance, there's credit cards. That's really what is dominant. Yeah, and they don't have checks even.
Yes.
Yeah, I don't know about checks here. I think checks do work
Yeah,
here.
people use checks here
Still
quite a bit. Yes.
not in South Africa. In Kenya, we don't have, I mean, we use some checks, but not that much. By the way, the US, it's all checks.
Yes,
unfortunately, yeah.
Yes.
You're still writing pieces of paper to your landlord, you know, kind of, well, okay, there's credit cards and things. So I'm just making the point that there's this distinction. In Kenya, everything is mobile. And so, for whatever reason, I think we could discuss some of the reasons if we have more time. Actually, it took off in Kenya. Today now, for instance, I have made the point that in 8 years, I never went to a commercial bank. Never did.
For any transactions?
Any transactions.
It was all mobile or online?
Never online for me. Everything was mobile.
Yes.
I could do it. I could do all those transactions and from anywhere. Yeah. I mean, the U.S. I mean, Nigeria. I mean, I can actually make a transaction just now. You know, to whoever. You know. So I'm making the point that there are idiosyncrasies that are specific, and one is to. Now, as for the central bank digital currency, it's actually looking at a specific space. It's not the end-all and the solution for everything with regard to financial inclusion. And I have made this point in other places, even with my former, let's say, colleagues,
yes.
Peers, you know, other governors, etc. And some of the things that we need to do, for instance, I gave this example as to why is it that we hit the limits of some of the financial inclusions because of things that have nothing to do with the financial sector.
Yeah,
I made that point. But still, it's not something that you can say will resolve all the issues. We know it has been, I mean, there are countries that are ahead of us, you know, in a sense, they've put in this central bank digital currencies, the Bahamas, for instance, the Eastern Caribbean region, the ECCU, Jamaica just recently started that. I may have forgotten one other country, and that's pretty much it. But I think you can also see that those countries have a certain character in terms of size, etc. I mean, that is not Nigeria.
Indeed.
Yeah. So I think there's something to be said about those things, and that's why one needs to examine things carefully and then roll them out. And one can say, are there other things that we can do that could accelerate the outcome?
So we've looked at the role of central banks, and we focus more on banking supervision, financial stability, financial inclusion. I want to move over to the price stability piece, because this is such a topical issue. Inflation is a global phenomenon. It's not peculiar to Africa, even though countries like Nigeria are trailing over 30%. But you have other countries in emerging economies who are doing 45% and so on. So it's a worldwide problem. How are Africa's monetary authorities doing in terms of managing and controlling inflation? And some of this is imported, energy prices, food prices. How well, how would you assess the track record?
That's a tough question.
It is. 54 countries.
No, that's okay. I think for the most part, African central bankers are very conscious of their responsibility in terms of price stability. And so these shocks that came through, COVID shock, particularly post-COVID, right, with the supply chain shocks, etc., constraints. Then, of course, the Ukrainian war, or the war in Ukraine, so food prices, wheat, etc., and other things. All those shocks came to us from the outside. And virtually all central bankers in Africa understood that they cannot do nothing, and not just allow these prices to, inflation to just be imported into their countries, etc. So they try to do what they can do with the tools that they have. Now, some have been more successful, others less so. And so you have a variety of countries. Some of them are in the 5%, less than 5% inflation annual. They are there now. Kenya is actually at just below, it's like 4.4 or something like that. Uganda is also down there. And then you have others, and then you have others in the tens, and then you have countries like Nigeria, 33%. Now, the impact of this, first and foremost, is to the weakest in the economy. So inflation is such a bad tax because it hurts the weakest the most.
Yeah.
And that's one of the reasons why we cannot just let it be.
Yes.
Yeah. Second, so that is one thing, and but then also when inflation becomes high and remains high for a period of time, and the various people in the country become more conscious about inflation, and they begin to take action, or let's say, to hedge against inflation. And this, for instance, ends up indexing prices. Yeah. Or, for instance, in the worst case, prices are indexed in US dollars.
Yes.
So like rents here, for instance. I mean, so it's clear that they are trying to hedge against that. Then you have other things, of course, they all want dollars. Nobody.
And that has its own consequences on exchange rates.
Exactly. Yes. And then you also have these guys are going to crypto. Yeah. Again, hedging. They can say whatever they want. This is just an asset class that allows you to do various things, including hedging.
Yes.
So I'm making the point that those things, in effect, weaken the economy or the specific economy, and also weaken the effectiveness of monetary policy. This is why central banks cannot, well, let's say, it would be so damaging when central banks sort of ignore inflation for an extended period and do nothing. So that's the general point. And maybe just to finish, I think one of the things that we need to do more is to expand our tools.
Absolutely.
And have clarity about what is it that we are doing, and to speak more about what we are doing as central bankers. Now I'm talking on their behalf, and I'm just outside that space.
Yeah.
They need to talk more about what they are doing and explain to the population what their objective really is.
Absolutely. And I think you make a good point on communication, because the key with monetary policy tools, the way you use them impacts market sentiment and investor sentiment. So signaling is quite a big deal. But there's also the issue about the true cause of inflation in economies like Africa or Kenya, in like Nigeria or Kenya, I beg your pardon, and whether monetary policy is a sufficient tool. It's necessary, but not sufficient in itself to curb inflation, particularly where you have broader structural and macro issues. So which one of those factors are playing harder now in Africa's biggest economies? Some would argue here in Nigeria, inflation is a structural problem.
Yeah, Rocky, you're asking me like my professor.
Professor of economics in the seat.
Yeah, so you are the professor and I'm the student. You are right. Some of the sources of inflation are varied. Yeah. One of the sources, as I mentioned before, is this thing of imported inflation through food prices, wheat, etc. But I think also here, agricultural prices. So when there's the harvests are bad or whatever else it is, and the cost of production is rising, etc. Obviously, that is that food inflation is felt by the consumer. Yeah. So you can say monetary policy doesn't have much impact on that, which is, I think, the point you are making. And that is true. But what we need to do is you allow generally good central bankers who allow the first effects to go through, but then resist the second order effects. And that's basically it. So you could then have prices will go up, particularly on those products, because they are not there. There's a shortage of supply, but they won't have a knock-on effect, or you'll try and mute the knock-on effect on other things. So that's basically the sense of monetary policy. That's the way it should be done. However, so I've talked about agriculture. I've talked about imported inflation. But I think there's also the third one, which maybe is also now looking at the newspapers here has been significant. But maybe let's talk about the price of oil.
Yes.
Yeah, the price, the pump price. Yeah, and this has a knock-on effect on transportation, for instance. And transportation and price of agriculture. If you're doing mechanized agriculture, that's a major input, etc. And also here with all the diesel generators that are going on, I mean, it really affects the cost of production.
Yes.
So I think the point I'm making is the same applies there. And what we have to do then is to deal with the problem head on. Don't use second order solutions. Don't use second
problems.
yeah, so deal with the first order solutions. So for instance, diesel, it's quite clear what needs to be done. And by the way, one of the things that I learned from my first trip here, I was very lucky to be invited to tour the refinery, the new refinery, the Dangote refinery. And I was just blown away by the courage, by the potential, etc., of resolving no longer just Nigeria's problems, but actually Africa's problems on supply of a pretty important commodity for all of us. So I think that would help at least anchor the supply and indeed therefore the price on diesel. But obviously having anyway, so I think it is something. The same applies with agriculture.
Absolutely.
Yeah. So the way to deal with agriculture is increase supply.
Yes.
Agriculture should no longer be a social sector. It should really be a productive sector.
Yeah, indeed. Very interesting. So Kenya and Nigeria have faced some very similar issues with some of the socioeconomic discontent. And I know President William Ruto has been navigating both the political and economic space around these issues with the protests that we saw. These interventions that many African governments are making to control some of these macroeconomic headwinds don't always seem to go down well with the population. So not only do they have to manage the economics around these issues, they're also dealing with their own political expediencies. Do you think, for instance, that President William Ruto's interventions will eventually, and he's reaching out to some of Kenya's external partners, will eventually bring the solutions to the country, or is it really a homegrown issue?
I cannot comment on the specific plans because in the last 1.5 years I've stayed away from
politics.
and not politics, but actually sort of economic management issues. Yeah?
Sure.
I do need to sort of cool off in that sense, and so I stayed away from that. But in general terms, what is clear is there has to be solutions, economic solutions. And some of those economic solutions will hurt some people, as others feel that, that is a heartless. So there'll be a bit of variety in terms of who gets affected the most, right? And this is particularly in the case of taxation, etc. Yeah, the incident of that will probably land on some sectors or some people more than others. So that I think is clear. But I think there are maybe 3 or 4 points I would want to make on this. I don't think the issue itself is just an issue of the economic policy.
Right.
Yeah. And the noise we've had is not just about economic policy. Maybe that was the trigger.
Right.
But the issues are much deeper. So it is more first in terms of, discussion, communication on those things. Now, I don't know if we as central bankers have learned that we need to do better in communication. So you don't just issue a press release and therein, well, I've communicated, it's in the press release. So we've understood that we need to go out and and talk to the people that, touch the flesh, as it were, right? Not as politicians, but explain some of the most basic things to the population. And it's amazing that even the ECB and the Bank of England and the Fed have been on this sort of campaign, improving their communication.
Yes.
Now, some of us have succeeded more than that. Jamaica, by the way, won a prize for their communication, and they actually had even a video explaining why low and stable inflation, some sort of reggae thing, low and stable inflation is important for the economy, and so my point is that communication is one of those things.
Yes.
Secondly, there are some issues that have been problematic, and they came to the surface. And these are, for instance, the whole business of corruption. That is a big issue. It has to be dealt. We have to slay that dragon.
Absolutely.
If we don't slay that dragon, then the game is up. I mean, it's as simple as that. You can say whatever you want. I'm now talking to you. I'm not talking to you, Njoroge, but
yeah.
Any one of us can try and justify whatever is being done and all that. And I think that is as false as Judas.
Yes.
So let's be clear that corruption is a big issue and it has to be dealt with.
Indeed.
Thirdly, the issue of expenditures. Yeah, it's not just revenues, it's also about expenditures. And that has to be rationalized. Let me give you an example. Here in Nigeria, we used to spend about 2% of GDP on subsidies on fuel.
Yes.
A number like that, right? How much was the government spending on health, for instance?
Or education.
Or education, exactly. So on health, on education it was 0.4%
Yes.
of GDP. And that's the average for the 5 years to 2022. These are numbers that I have read in UNCTAD reports or whatever. And health, it's also less than half a percentage point. So you put those together, it's less than 1%. I mean, seriously. And we are trying we are thinking that this is our next generation we are investing in. I mean, it's so important to have expenditures, not just expenditures for expenditure's sake, but proper expenditure, that have impact
Absolutely.
on the population, on health. This is social capital, really.
Yeah.
So I'm making the point that rebalancing needs to be done. I mean, sure, we have enough white elephants out there that, cost so much, but yet do so little in terms of helping. So finally on this, the point is, I think the young people, and this is something that they are saying, the young people, maybe they are the ones that get agitated a lot more. Yes. I'm sure in your own household, you have some young people that, don't quite see things the same way, and they are impatient or whatever, and we tell them, be patient. No. Basically, there is that prayer, the serenity prayer, yeah? But I think they've changed it a little, and they ask for courage to change the things that they don't, the things that they don't agree with. Yeah?
Yes, indeed. I mean, look, the task of African governments in this climate is not just for today, but it's for future generations. But part of the legacy for future generations is that we leave our economies in a state that is manageable. And so the decisions we take today, for instance, around borrowing, can impact. They say government is a continuum. And the decisions of previous governments in Kenya or Nigeria do impact what present administrations do. Cote d'Ivoire, Benin, Kenya have all gone to international bond markets. I think almost $5 billion worth of bond issuances just in 2024 alone. Because you can mobilize those resources quite quickly for infrastructure, for funding the budget, for instance, and other types of economic needs. But there's also the relationship African governments have with the Bretton Woods institutions, the IMF, the World Bank. There's a relationship African governments have with China. We're just on the aftermath of the Forum on China-Africa Cooperation that took place recently. Ruto was there. Our own president, Tinubu, was there. Africa has many friends and partners. Africa, some countries have a debt problem. They're restructuring. Africa needs to find cheap, concessionary, long-term sources of financing, ideally in local currency, but we'll park that for now, to fund development in Africa. What is the best option for finding funding for Africa now, in terms of governments being able to do what they need to do, ease in the fiscal squeeze, fund their infrastructure projects, and fund long-term projects across health, education, ports? What is the best model and partner for engagement for Africa?
Wow.
I know that's a big question.
Yeah, so maybe just giving you a quick response on this. I don't think there is one direction. It's a univariant sort of direction, right? I think it's multidimensional, meaning we need to source funding from all possible. We should be ready to source funding from all possible sources. Commercial, bilateral, bilateral from the West, bilateral from the East, bilateral from the other sources, right? And I think for me, the issue is the principle by which you decide this one as opposed to another.
Okay.
And so that, I think, is where we need to be quick.
To be clear. What should those principles be?
I mean, the principle is, you need to have the cheapest for this specific project or specific outcome. As simple as that, yeah? And financially, it has to make sense.
Right.
So now, what happens is at times the pressure, gives you're under pressure, and I don't know, the Minister of Finance is under pressure to fund this thing, and therefore the funding, he doesn't have, quote unquote, time to assess whether this is the only potential source or the cheapest. And the cheapest is not just interest rate, it's also currency, it's also, maturity.
Indeed.
And also a big issue is also the, how do you repay? Is it a bullet or is it sort of a gradual repayment, etc.? But the general principle of concessionality, concessional funding, obviously applies. We should try as much as possible to get concessional funding for these things. So I want to make it clear that some of these things are not, let's say,
linear in a sense.
Yeah. But I think more importantly, there are obviously political dynamics behind some of these things, right?
Of course. Yeah.
And I think we've learned our lesson in some of these things. But the specific question about China and other sources, I remember now the Prime Minister of Barbados, Mia Mottley, saying that really we should be friends of all and satellites of none. Yeah. And I think it is valid. Yeah? And frankly, let's be honest, Japan is the #1 investor in U.S. Treasury bills, U.S. Treasury securities.
Yes.
Yeah? And China is #2 with like 800 trillion US dollars worth of that. So it's not like they too don't depend on China or Japan or other investors.
Despite their diplomatic issues.
Exactly.
Yes.
So I think we need to appreciate that decisions have to be made following that point that we are friends of all and satellites of none.
It's a very good point. Governor, we've talked a lot about Africa, the economy, central banks, financial inclusion, and all the things you spend a lot of time thinking about in your years as governor of CBK. But what next for you, sir? What is next thing? Are you going to be lecturing in an academic institution somewhere, or moving to Nigeria to start a new career? What is on the horizon for you, sir?
Good question. I don't know. I don't know what is on the horizon for me. There are some things that really excite me.
Okay.
Technology, innovation, and that will always be there. So that's something, it's that sort of bug that I have, you know. And so whatever I do, I'll always be somehow connected to technology, innovation. Secondly, whatever I do will also, I mean, it has to be things that I enjoy, Indeed. You know. And I am not sure, I mean, there are many things I enjoy, but I think it will also be for Africa. You know? I think now I see that Africa is really where we are. But at the end of the day, refugees move in silence.
Indeed.
Like lasagna.
Yes, indeed. And that's a good note to end. I'm not surprised that Africa will be at the heart of whatever you do. Thank you so much for joining us today.
Great.
Patrick Njoroge.
Thank you very much for inviting me.
Former Governor of Central Bank of Kenya.
Great.
Thank you.